Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be talking about Bitcoin, what's been going on most recently with the price action and what we think is just around the corner and what might actually happen next. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, then why not go ahead and check it out. Links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. And if you happen to be looking for more from the crypto space, why not check out the Patreon services as well in the description down below. We actually cover a lot more for the Patreon members via the Discord server, so why not go ahead and check that out if that sounds of interest to you. Okay, let's talk Bitcoin. Boy oh boy, has it been a few crazy days here for crypto. So what we've got kind of going on here is this structure change. Okay, so anyone who's kind of up to date with what we're talking about yesterday and what we're talking about this morning on the Twitch live stream, which I'll link in the description below. This morning we're talking about a three-wave drop, and it will either looking at a double bottom or actually this $2,439 target, of which about 2 hours ago we dropped down to 20,451, got close to it, so still, you know, it's close, not quite there yet on that one-to-one. So possible that it's done at this point and could move up. Also possible that we just finish this off a little bit more to the downside, but for the most part all overlapping. Nothing here is looking like we're trending down, so instead this is counter to what's been going on over this side. Obviously we're taking a look at this as a bigger five-wave structure, of which there's 5 waves inside this little move in the middle here, so we're going up quite impulsively and pretty nicely. Okay, and all looking pretty good for finishing this off. Now approximately this target, and I can actually go ahead and reframe this and readjust it to this existing low down here, because the lower that the wave 4 goes, the higher that the wave 5 is going to go. Okay, so here we can see that this is between 21,154 and 21,371. Okay, now I want to talk about kind of what's been going on in the last few days that's really drove this movement, right? So basically you've seen the DXY go on an absolute tear. Now when the DXY goes up, Bitcoin and other crypto assets, other financial instruments go down, right? This is kind of a given, right? Based on the fact that the dollar index goes up higher, it takes fewer dollars to buy things, for example, right? So you can see the price of an asset go down as it requires less dollars to buy that asset. And likewise, in the last couple of days, what do you see? You actually see this down movement in the DXY. Now the dollar index going down means it requires more dollars to buy certain types of assets. Okay, so in the case of cryptocurrency moving up, it's actually kind of really obvious that the DXY is the culprit behind it. But we can go a little bit deeper than this. Okay, and talk about, you know, what's going on with the wallets. Now, one of the big things that we talk about on this channel pretty much every single day are the shrimps, the dolphins, the sharks, the whales, and the kraken. Now, over here, we can see that the shrimps have started to actually come out quite a bit as that price is going up. And as Chris says, maybe they're learning to sell on these peaks, and or maybe they're just getting shaken out of the space. Last opportunity to sell before things turn on them again. We don't know, but they were steadily accumulating, and we've seen a little bit here of a pretty significant down movement with these wallets. That's interesting. The dolphins also getting shaken out of the space, and over this side you also see the sharks coming out of the space, but the whales are buying and the kraken are buying. Okay, so we know that it's not really being driven from accumulation as such, because when we take a look at the inflows and the outflows for Bitcoin, we can of course see that there's more in inflows than outflows, meaning that the demand is actually not there. There's too much supply. The demand just simply can't soak it all up. So when we take a look at the price action of Bitcoin going up, and we take a look at those on-chain metrics, we can kind of ascertain that actually it's not demand driven, the pump to the upside. Instead, what it is the DXY going down that's actually forcing the price of an asset up higher. Okay, so it's good to kind of get these things in mind, but these things do have consequences to them. Okay, it's not as simple as just saying, oh, we've got some demand, or we don't have demand, or the DXY is going up, or the DXY is going down. There are some real world casualties as a result of that. And here we can see that there's $456 million worth of liquidations. Now, this is quite a lot. It's a lot of liquidations, right? This is right up there in some of the higher tiers that we see in this bear market. And it wasn't that long ago that we were talking about, about 40 or I think $30 million worth of liquidations. And I was saying I won't be surprised if we see that multiplied by 10x at some point soon. And we can, of course, reflect on where that money has come from. So people have been losing out on things like Bitcoin, Ethereum, and have been gambling on Doge as well. We see AAPT. And we see a bit of ADA as well. So you can see what basically the assets that people have been really heavily leveraged or liquidated on, and we can see that it's short positions that have been liquidated. Now at this point it becomes glaringly obvious as to one of the biggest problems that we have here, and that is that FTX are responsible for 76.42% of those liquidations. Now that is absolutely insane. They have liquidated solely on their own $349 million. Well, okay, so we've got to really kind of think about how centralized that is. 83% of the positions liquidated from those guys were short positions, obviously, as that price pushed up. So a lot of leverage players, maybe on FTX, are really getting affected. Now we can go down this list and we can say, okay, well, Binance is at 10%, Bybit is at 4%, OKX is 4%, and so forth, right? So maybe we want to kind of stay clear of things like FTX. Maybe there's something going on there that we don't really know. I'm not going to go into all those details. But as many of you guys will know on the channel here, we are we personally like Bybit and the newest addition to kind of the channel, which is BitGet as well, right? And I just want to kind of highlight this little video from BitGet that was sent over to us. And this one actually shows their partnership with 𝗕𝗘𝗪𝗔𝗥𝗘, right? And it's a good thing to see that these sponsorships are occurring and they continue in this space, right, outside of things like crypto.com. Now, with BitGet, they're also giving everyone a chance to win a jersey from 𝗕𝗪𝗔𝗥𝗘 here in this particular kind of thing going on. So I'm going to link this in the description down below. Okay, so they want to kind of welcome 𝗕𝗪𝗔𝗥𝗘 as a partnered with BitGet, and in all the hype of our world sports star getting on board, we've prepared several grand prizes. Okay, so I'm going to link this in the description below so you can go check it out, and obviously check out the Discord server for more more information about it. Now, we really do like BitGet and everything that they're doing. So again, there's links to those in the description down below. But I will stress, obviously, that leverage is high risk. And as you can see here, with $456 million, these were all short positions getting liquidated. But I will want to stress that FTX seems to be the main culprit behind that at 76.42%. And I just think that is such a huge centralized amount of liquidations on one particular platform. It just feels rather unnatural to me. That, or they're encouraging high leverage and high risk. I don't know. It just seems like an absolutely insane amount of liquidations on one singular platform. When we take a look at Binance, only driving $46 million of liquidations on their own. Okay, now we know that Binance is huge. So to kind of think these two things together, they don't really stack up side by side, and they don't really tend to make a lot of sense. So we like BitGet, we like Bybit, and they kind of do various different kind of competitions and things like that in the space. So well worth checking them out. Links are in the description below. Let's jump back into Bitcoin though, right? So as I was saying, we saw these moves happening, right? We see the volatility of the DXY really driving the price action of Bitcoin and other cryptocurrency assets. Now, we do know that it's not really been driven from new demand. In fact, there's more supply coming onto the exchanges than is being soaked up. So we know that it's not supply and demand driven. It's specifically just DXY driven. Now let's talk about the structure of this, right? The market structure is interesting. I think it is tracking 5 waves going up. We've completed 5 waves within our wave 3. We're looking to complete this little 3-wave drop down here. As I said, I estimated this target this morning to be 20,459. At the moment, we came down to 20,451. Maybe we'll come down a little bit more. Maybe we won't. We'll see how that kind of goes. Then we're going to be looking for a move to the upside. I would expect 5 waves, and we're looking for this to be between 21,154 and 21,371. This here is going to mark our estimated area. Now, up here, I have this dashed line. This dashed line is 21,666 and would mark a much bigger impulsive structure from down here. It would essentially look like this: 1, 2, 3, 4, and 5. So all eyes are going to be on that area as well, because if we do hit that point, then it means that we are potentially going to be rallying up a little bit more. Now, let's talk about momentum. Now, we could talk about momentum with the DXY, but that wouldn't necessarily make the most amount of sense. But just bear in mind, it's going to be the opposite of what the Bitcoin momentum is showing us. Right now, we are completely oversold on our 60-minute. Okay, and right down here. Now on the DXY, we're completely overbought on this. Okay, they're the opposite way around, which means the DXY is set to come down a bit and Bitcoin's set to go up a bit. Okay, that kind of means that our 5th wave target expectations are there. The 4-hour is not overbought, not oversold. The 8-hour is overbought. The daily is overbought. So do prepare ourselves for a big drop to the downside. Okay, so this is going to be basically indicating to us that the DXY is about to surge back up again. Now I can come over to the DXY. I can bring this up here and you can see that these are oversold on those platforms or those timeframes, that it is overbought on Bitcoin, right? So we can see that these are the opposite way around, which means the DXY is set to go up and Bitcoin is set to go down. Okay, therefore, do expect the entire space to pull to the downside. Now, coming back to those liquidations, you can see people were a little bit premature with this. Okay, the DXY completely took people by surprise at the sum of $456 million. Now we can argue what's going on there, but we would, kind of just reflect on the fact that we want to make sure that we're on the right side of a short. Wait for confirmation. Don't just gamble, right? Essentially, if you're going to short the market here, you're going to be looking for good confirmational areas. Now, just this here is a 5th wave expectation. Doesn't necessarily mean it's going to end here. Okay, these things can overextend and we could take out this higher range. I'm not expecting that at this particular point in time, but it's there as a possibility. So caution here. Okay, we wait for confirmation that this is going to be our area of basically supply coming in and taking us down lower, right? We don't want to just kind of put a short in right now. For example, let's grab a short position and say, put it right on this 382. You could put your stop loss there and you could gamble and look for maybe a 1-to-3 ratio, for example, if you really wanted to. Most people will be looking at 1-to-2 though, maybe a little bit more less than that, like 1-to-5 or something to that fetch. And you could do this, right? You have a good risk management and you could do all those things. Alternatively, of course, you could wait for confirmation and really get in a much better position. So for example, if we come in here and we look for confirmation, we find a good zone, we don't move in straight lines. Instead, what you could do is you could say, okay, we can see that we wicked up into this area, we've came back out. Chances are we kind of come back in. We can set this up with a much tighter stop loss. And again, we can come back down to these levels and really talk, instead of going 2 ratio, we could be looking for a 5.32% ratio. Okay. So it's important that we understand the differences on these ones, sniping versus these kind of long kind of positions. So just bear in mind that we want confirmation before we do anything if we are to go and short the market, rather than just gamble. And otherwise we end up in positions like this with $456 million worth of liquidations and potentially over leveraged players like FTX here, liquidating you at $349 million, right? Those are the things we want to avoid. So break of structure is going to be very, very important. There's lots of different techniques to this. I use Elliott wave theory in combination with a few others. And for me, this looks like a good area at the moment, but I'm cautious about the 21,666 level at the top there. And before, actually going down into a 4th wave and a 5th wave up higher after that. Essentially, the macro stochastic RSIs are indicating that we are likely to see more downside, significantly so. And when I zoom out of all of these smaller movements and we actually reflect on the bigger ones, we can see that, yes, there's a new all-time low down here. An all-time low, but a new lower low coming down here towards that 14,675 approximately. But we will see how this kind of plays out and whether or not this here is going to become the bottom. And what I'm looking for, guys, is obviously what is going to be happening on with those whale wallets, right? So as I come back up into here, and we take a look at 2018, we can see that the shrimps were shaken out of the space. And while the shrimps were shaken out of the space, the whales were buying, and whilst the whales were buying, the krakens were dropping it onto the market. This is the setup that we're looking for. Now, if I come here, we start to see a little bit of a decrease here. We start to see a little bit of an increase here. These guys are also still buying. So at the moment, it looks like we might be progressively working our way towards a bear market bottom. We aren't there yet, but things could be actually progressing quite nicely on that particular range. So guys, I'm going to leave this video right there. If you found it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And with all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.